The dominoes are lining up for a 2024-2025 bull run as the Federal Reserve just announced they are looking to cut interest rates 3 times in the next year. In today's video, we're going to be discussing what we expect to occur on the macro as well as the current short-term price action and where Bitcoin is likely to go next. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a look at the current short-term price action, discussing the recent move, what we expect moving forward, the next 24 hours of price action, and the key levels you should be watching. We're also going to be taking a deep dive into the recent publication by the Federal Reserve announcing 3 potential interest rate cuts moving into 2024, what impact this could have on the markets, and why this could fast-track / facilitate the 2024 to 2025 cryptocurrency bull run. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos on Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the 3rd link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, Bitcoin, and the relevant economic data. If you are interested in joining our VIP group with over 600 members, we post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. Not only will you get access to all of this, you'll also get access to our group chats, our general chat, our trading chart and education chat, our news chat, our help chat, our trade setup chat, and our daily video chat. If you're interested in getting access to all of that with over 600 members, contact me in the pinned comment of the free channel. You can find out more information over here, including finding access to our entire trading track record with 32 months of trading data. Let's go ahead, guys, and dive on in to the video. Starting on that market data, as we can see, the 24-hour volume is up 3.7%, sitting at a total of 124 billion. 24-hour liquidations are rising as well, up 33% on the 24-hour period at 185 million, with the majority of those liquidations being, again, 86 million in shorts and 99 million in longs. In the last 12 hours alone, 74 out of the 86 million have come from short positions as a result of Bitcoin bouncing quite aggressively from that $4,000 area, again following the recent news from the Federal Reserve announcing the interest rate hikes moving into 2024, or should I say within 2024. So we saw a bullish reaction on the short term, liquidating a whole lot of built up shorts within this area. Moving over to the DXY, we can see the DXY has plummeted, resulting in the announcement from the Federal Reserve. Of course, when the interest rates are being cut, or when we potentially expect interest rates to be cut, we do generally see the dollar weaken. We have seen the DXY pull back as a result, as the market tries to price it in, or it moves in anticipation of future economic events. And so that's really how the market moves. It moves in anticipation of future events. So moving over to the S&P 500, we can see it is challenging this weekly high here at around 4,760-ish. Again, breaking through this level of resistance will send the S&P 500 to an all-time high, likely looking to around $5,000. If we fail to break above here, we still have a lot of established support. We have our horizontal trend line and we have our diagonal trend line acting as an area of support. We are watching for a break over this level. Moving over to the Dow Jones, the Dow Jones is leaps and bounds ahead of the S&P 500, already not only breaking through that level of resistance, closing a weekly candle in, but also breaching the all-time high, moving to the $37,500 range. With 2 days remaining on this weekly candle close, getting a weekly candle close as high would be fantastically bullish. Let's go ahead, guys, and jump over into Bitcoin, the economic data, and everything in between. But before we do, a quick word from Bitget and BingX. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume, they both have extensive liquidity pools and market pairs offering up to 125x leverage, and most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and discuss the recent economic data. So, as you know, the interest rate hike was yesterday, well, the interest rate decision, was yesterday. They just opted to a no change. So the Federal Reserve did not change interest rates. They kept them as is. Looking at this, so in the Federal Reserve meeting, which occurred 30 minutes post the interest rate decision, they did announce they are expecting to cut rates 3 times in 2024. This is the first time since they started raising rates that they've shown any indication that they're preparing to actually bring rates back down. So the narrative is starting to shift again. We have to keep our eyes on the narrative. This could potentially bring interest rates closer to 4.6% from the current 5.2 to 5.5. Taking a look at their CME tool over here, we can actually see that this is the first time for a very long time we've seen people expect an interest rate cut, with 16.5% of people expecting an interest rate cut in the January 2024 meeting. This is pretty interesting and of course very, very good news. If we take a look at the interest rate decision and we take a look at how interest rates affect the market, we have to understand a few things. And primarily, we have to understand the concept of 1, perceived systematic risk, and 2, that the market will always prepare in advance for what is expected in the future. Okay, so what the hell does that mean? So, if we take a look, first and foremost, we have this flowchart. This is a very interesting flowchart. It more or less explains how raising interest rates and inflation can actually impact asset prices negatively, but we can reverse this process to show you how they can impact asset prices positively. So, for example, if we have falling interest rates, we would have a decrease. Construction outside, I don't know if you heard that one. Very loud bang. But if we had falling interest rates, we would actually have the dollar decrease in value, okay? The cost of goods and services will decrease as the dollar decreases in value. The available house cash flow will increase. Debt to service ratios will increase as a positive. Companies will acquire assets to increase their balance sheet cash flows as asset prices will rise as a consequence of the dollar reducing in value. Looking at available household cash flow, a lot more money will be free to flow into potential risk assets or other markets that will result in those markets rising in value. So that's what happens when we see interest rates rise. So moving to our inflation and interest rate trajectory curve, what we have seen in the last few months, we saw inflation push sideways. Let's go ahead and draw this out. Then we saw inflation trickle very slightly upwards. Moving over interest rates, we have seen interest rates continue to push sideways, and now we have been told that interest rates are going to pivot downwards towards, again, rate reductions. That is telling us 2 things. Number 1, we would expect the Federal Reserve are expecting inflation to either remain controlled, and controlled meaning they will increase at a controlled rate, not an excessive rate, because inflation is always going to be rising in an economy. It is completely normal, okay? Or they will be expecting it to hold relatively stable for the next or few coming months. That will allow them to actually reduce these interest rates. And with that, the overall systematic risk, and more importantly right now, the perceived systematic risk is starting to reduce. So when we have a reduction in perceived and actual systematic risk, what happens is the risk of these assets in comparison to the expected or estimated return start to increase as the dollar loses strength. And this means people are starting to move money out of cash and into assets, which pushes the asset prices higher. Now, this isn't something that's going to happen overnight. This is something that will generally occur when we see interest rates falling or interest rates being very, very low. And this environment could facilitate, or should I say, if it occurs, will facilitate a period of expansion in the markets, or what we would call traditionally a bull run. Now, if we do take a look at the Bitcoin bull run over here and the Bitcoin 4-year cycle, that is expected to kick off in 2024. If we take a look at the 4-year cycle over here, we can see the 2024 to 2025 bull run is when we are expecting to see that play out. Specifically, from April 2024 to October 2025 is when the bull run, according to the Bitcoin 4-year cycle, is supposed to initiate and actually play out. So now that we've got word that interest rates are going to start to be reduced in 2024, this tells us by the time we get into mid to late 2024, potentially early 2025, interest rates will have been quite low, and this will be an environment that could facilitate the 2024-2025 bull run to actually develop and occur. So some fantastic stuff over there, very interesting stuff to pay attention to. Let's go ahead and jump over to the Bitcoin charts. So as you know, guys, in the last 24 hours and the last 3-4 days actually, Bitcoin has had a wild ride. It's been very choppy, it's been very indecisive, and that is generally what we see moving into large economic releases. We see very tricky trading conditions, we see a whole lot of choppy price action, and we see a lot of large wicks and liquidations on both sides of the coin, for longs and for shorts. A quick summary, we saw a breakdown of a 10-day long uptrend, losing our base of support, which is represented by this 4,300 level, 43,100 level, which is going to be the dollar trend line. We saw a massive flash crash to retest our 42K support, which we eventually actually lost, moving downwards to this $40,000 region. Since then, we did develop a short-term downtrend. If you watched the other video, we did actually talk about a short-term downtrend. We broke out of this short-term downtrend, resulting in a continuation through that 42K level, and now to retest the main short-term downtrend, which we are actually retesting now, which is in confluence of this horizontal resistance and our downtrend level, which is reflected by, again, the retest point on the 9th of December, and of course on the 11th of December. You can see this is actually acting as a bullish trigger point, meaning, guys, if we see Bitcoin break above this level, okay, and it is a diagonal level, so at a minimum, we want to see at least an hourly close above, but when it comes to time frame and diagonal, when it comes to time frames in general, there is no set exact rule you have to follow. A 4-hour close, a daily close, an hourly close. Generally, the larger the time frame close, the more confidence that the level of resistance has been broken and established into support. As we add more price action, remain above this level of confidence, then again, or then not above it. Meaning, again, if we see a 4-hour close above the trend line, then it's going to be a stronger indication of the breakout, as opposed to a 30-minute close or a 15-minute close. So it really comes down to context, how the price action is moving, what the momentum is doing, and it also comes down to individual risk tolerance, because nothing in trading is certain. So if you get an hourly close and you think, well, this is solid for me, I'm going to go ahead and throw a long on, I'll put my stop loss very, very tight under the trend line and hope it goes up. Well, that is a decision you can make. If you want to wait for a 4-hour close, you run the risk of potentially entering a long slightly higher up, but you also, on the flip side, have more confidence in that position. So it all comes down to risk tolerance. But at the end of the day, guys, resistance is resistance until it is not. And this is currently a level of resistance, not only a diagonal, but also a horizontal level. If you always want to check your bias when trading, the best way to check your bias is to simply flip the chart. Let's go ahead and flip it. If we flip the chart over here, would you expect the price action to immediately break down over here, or could you potentially see any scenario where we could see a bounce. So obviously from this scenario over here, you're going to be thinking, well, support is support until it's not, so I'm not going to look for a correction below. Therefore, when we flip this, we would not expect a break right through. Resistance is still resistance until it is not. You have to be objective regardless of what the chart is visually looking at. Remember, you're not trading on visuals. You're trading on the actions and potential future actions of buyers and sellers. We use technical data and structural data to indicate and decipher what is going on and what is likely to occur. So in this instance, we are waiting to take longs above this level. We are watching and we are being very patient for a breakout. If we do not see a breakout, we are looking for a retracement back down to 42,000. This will be a very good area to potentially take longs again, as it is a strong level of support. Be looking for a retracement to 42,000 before then bouncing and breaking back through. Of course, if we lose 42,000 and we break below it, that would again initiate the downtrend to 40,000. So again, we have got two key levels you're watching in the next 24 hours. Let's go ahead and bring them up. We have got our bearish trigger point. And let me know, guys, actually, because I've been doing this for the last few videos, if typing these little annotations in help you, let me know. I'll keep doing it. Otherwise, I'll just ignore it and just talk about it. So we have the bearish trigger point over here, which if we do break down from, we will likely see a continuation to our support. Okay, and we have our bullish trigger over here, which is going to be this dotted trend line. If we break above, we will likely continue that uptrend towards 46,000. Yes, 46,000 is that next major high time frame level of resistance marked out by this red zone over here. That is the expected move if Bitcoin is able to flip bullish on the short term. So definitely keep your eyes on those two major levels. That is exactly what I'm going to be watching, and I highly suggest you do as well. So let's go ahead and zoom out to the 4-hourly chart. Now, if we take a look at the 4-hourly chart, again, Bitcoin is not looking fantastic, right? We are potentially creating a lower high over here. If we fail to break out, we have our major uptrending support line. We still do see some overall weakness in the charts as we are in this overall downtrend. So Bitcoin isn't looking fantastic, but at the same time, it is not looking awful, as on a higher time frame, the charts are still very bullish. While we remain above this major uptrending trend line, the overall expectation is that Bitcoin is going to move from this level of support into this level of resistance at 46k to 48k. However, this move does have a time frame restraint on it, which we'll be discussing in just a moment, which does again throw a bit of a spanner in the works of a continuation upwards. Now let's talk about the bearish scenario. If we break below 42k and we see a continuation to 40,000, this of course would be very bearish. The move from 42k to 40,000 would be bearish. However, when we reach 40,000, we have a zone of support that spreads from 40,000 to the uptrending major support line. This cluster of price action over here is going to be acting as a zone of support. In fact, a very major zone of support, as this is a 2-month long major uptrending support line. If we lose that level, that will be catastrophic for Bitcoin, for altcoins, for the cryptocurrency market. We will likely see a strong correction through the 38k support to 33,350. Now, the reason that will be so bad for Bitcoin is because we will be losing the major area of established support at 40 to 38k, and we know when we break through supports, we generally continue to our next major support, which is sitting at 32,000. So we could see a very brutal correction for Bitcoin if we fail to hold that level. Definitely watch out for that one, guys. Okay, so what we said before was Bitcoin has a time restraint on it to make a move upwards. What do we mean by that? So we have to go to the monthly chart to really dissect and discuss what do I mean by that. If we take a look at this chart over here, this is our 4-year cycle chart. More importantly, it is overlaid with a particular indicator, which is the baseline of the Ichimoku cloud. Now, I've explained this a few times, but we're going to go ahead and explain it in relation to the time restraint Bitcoin has. So in the past, we have seen the bull run start when we have 2 validation points. Number 1, we break a monthly candle close above the dotted trend line, and number 2, we break a monthly candle close over the baseline of the Ichimoku cloud. Now, in both scenarios, this occurred within the first 4 or so months of the 4-year cycle bull run phase, which is not expected to start until April 2024. And therefore, a monthly candle close above 48k, or even a monthly candle close above the baseline of the Ichimoku cloud at 42.2k would be highly unlikely based on historical data until at least April 2024 and onwards. That does mean we could, best case scenario, see within the next 19 days a rally up to retest 48k, only to reject again underneath 42k, close a monthly candle underneath 42k, move sideways until April 2024 before we break back above again and continue upwards into that bull run. According to historical data, that is exactly what we have seen in the past. Take the 2019 scenario, for example. We came up, we failed to break a monthly candle close above the baseline and the upper dotted trend line. We rejected, only to then finally break through these levels within that 4-year cycle phase. So this is telling us not only do we have a potential rejection and correction coming for Bitcoin over the next 3 or so months, but of course, also, we shouldn't be expecting Bitcoin to break above 48k and close a monthly candle above 48k just right now. And if we do, if we see a monthly candle close above 48k, if we see a monthly candle close above 42k, which is the baseline, we could potentially see the 4-year cycle deviate. We could see the price action deviate away from the 4-year cycle, meaning we could potentially see an early bull run. And this ideally is not what we want to see. Although we make money, although it's great to trade, although it's very fun, we do want to see the price action hold as steady to what we've seen in the past, moving forward as it becomes more predictable, as the predicted top would no longer be the predicted top if we do see an early bull run. I'm going to go ahead and leave the video there. Let me know what you think. And of course, guys, I'll catch you guys in the next one. Have a great day. Check out the Crypto Academy courses if you're interested in learning how to trade. 10-unit course, we take you through everything from fundamentals to TA, to structural analysis, to market psychology, to risk management, everything you need if you are brand new at analysis. This is the place for you. Thanks for watching. Catch you guys later. Cheers.